This is the Daily Market Rundown live from the Tradelo trading floor. It's July the 1st. Some highlights from today's show. Powell has been caught lying, Trump and Musk lock horns again, and oil is set to break out. Hello and welcome. Good day, traders. It is the 1st of July. Happy July month trading. We've effectively got 4 weeks until we get into the thick of summer, so do make it count in the month of July. Now, with that in mind, looking across the board, a little bit of softness. Okay, we saw this theme yesterday. It was very much about Europe soft. And the US, of course, pretty much rallied into the close. But again, we're seeing this softness theme come into Europe. And I do expect that's going to be probably passed over to the US, where I do expect just a little bit more softness in the US trading session today. And there's a number of things going on, so we will, of course, get into those in a moment. But if we look at the bond space, we've got quite an aggressive flattener taking place in the bonds. And again, it doesn't necessarily mean anything. Like I said, it's the first day of the month, and typically you do get some of these flows that just hit the market. The point is we've got a flattener in the bonds. Bonds are bid. We've got equities that are a little bit soft. And of course, we've got a day when the dollar is again getting hit quite aggressively. And we'll discuss why that's happening, because I suspect the market is now front running what we're about to get in terms of news. Now, with that in mind, let's get across and talk about our first topic. It's the big beautiful bill. We've just had a news headline hit from Treasury Besson telling us we will get a vote today in the Senate on the big beautiful bill. Right now, in terms of where things stand, is ultimately there's a lot of back and forth. The general thinking is that there's two sides to the argument, which is, you know, some people say they don't want to vote for it because effectively it's too expensive and too lavish, and it goes against ultimately cutting deficits. The other side of the equation is too many cuts to the Medicaid side of things, and that's ultimately why this bill has not quite yet gotten past the Senate. However, the expectation is it will clear the Senate. I think there's no real concern about that. I think it will clear the Senate, at which point, of course, it needs to be handed back to the House, and the House will need to revise it because, like I said yesterday, the bill is set to be a little bit more expensive in terms of deficit than what the House passed over to the Senate. So, of course, we will likely get past the Senate today, and then it goes back to the House, and then they can start arguing about all sorts of things there. The point is, does this get done before the 4th of July? It's unlikely. I think this is probably going to be extended into next week, but let's see what happens. We did talk a little bit about the implications of this bill, and what the market will likely do. The reality is that it doesn't look like the market actually, really cares too much about it, and it's, if anything, it is priced already in the equity markets. Okay, right now we can see that with equities at record highs. They do love this idea of this bill, and why wouldn't they? It's very lavish. Now, one thing to take away from this, and I think this is the key part about all of this, we did see Musk pipe up again overnight, and I think that's crucial. What he's saying is, in essence, because of how much spending this is going to impact the deficit, he's effectively said he's going to target anyone that votes for this. He's going to target them in the midterm elections. Okay, now this matters because we know that a large part of President Trump's victory and strong showing in the election was because of Twitter and, of course, Musk driving ultimately what's going on in Twitter. So I think it's interesting to see him stepping into the limelight again, willing to voice up and say, well, look, I'm going to back anyone. I'm going to really target the people that do vote for this bill. Now, with that in mind, I think where the play is there is of course Tesla. Okay, we know Tesla got punished quite aggressively when we did have these first spat between Trump and Musk a couple of weeks ago, and that's that part of the chart there. Now, today we are looking to open down about 5%, but I think the key takeaway is Trump has hit back to say, well, look, maybe Doge needs to take a look at some of the subsidies that Tesla and SpaceX are getting, and maybe we need to just investigate whether we're not just wasting taxpayers' money. Okay, now, what this means is we're probably going to get some further downside in Tesla today, and don't forget, this is not the reason you're selling Tesla. Okay, Tesla at a fundamental level, okay, if we look at car deliveries, they are going to have pretty much a shocker this year. We know that ongoing sales in Europe are very problematic. We also know that China's just released their new Xiaomi electric car, which had 300,000 sales in the first hour. So we know that Tesla's coming under pressure in two of its main markets, which is Europe and China. And we do expect to get a little bit of news from Tesla in terms of their revenue and their sales forecast. So it's not looking good for Tesla from a fundamental perspective. And of course, now we have the CEO coming out and going up against the president again. So it's just not good news flow for Tesla. And so I do expect in the coming days and weeks, we are going to see Tesla revisit that 220 level to the downside. So keep an eye on that. If we see a little bit of softness in the equities today, like I expect, don't be surprised to see Tesla really underperform. I think that's the key takeaway. Tesla's got room to the downside. And if we do see just a little bit of weakness in the indices, I do think you could see Tesla down 5 to 10% on the day. Okay. Now, with that in mind, there's probably bigger news. And this was obviously given to us by one of the traders in the Tradelo Discord channels. And this has come from the New York Post. Now, I'm going to stop there and say New York Post, simply because it seems like a little bit of a puff piece, but it's a puff piece that I think does have legs, okay? And so let's just paint a bit of context. Jerome Powell's being accused of lying to Congress. That's all you need to know. He's being accused of lying to Congress on the $2.5 billion revamp of effectively the Fed's headquarters, okay? So the general context of the story is that in front of Congress just a week or so ago, he was asked about questions about the ongoing spending and why ultimately they're overspending in terms of the headquarters, why they are missing the budgeted forecasts. And as well, he was asked about some of the more lavish spending, things like a private elevator for him and private access to the dining room via his private elevator and marble surfaces and rooftop terraces. And basically he came out and, in front of Congress said, this is all a little bit misleading and it's not accurate. The point is the way this article is being framed is it's being framed as he lied to Congress. Now, all you need to know is if you lied to Congress, effectively that does give the president the right to sack you. And I think that's all you need to know. I think this story has been planted. The timing of this is particularly interesting. And again, there's a couple of Congress people, is on both sides of the aisle that are also pointing towards Powell saying, well, look, this is grounds for removal and we need to be doing something about this because we can't be lying in front of Congress. Now, importantly, we also see that Musk has come out and made a comment on it. So it's, if Musk is going to also put his name to it and comment on it, it does mean there is perhaps a little bit more to the story than that meets the eye. Okay, now, we know fine well that President Trump would love for nothing more than to get rid of Jerome Powell. He would have this article on his desk first thing this morning. So don't be surprised to see some form of a headline from Trump today. Okay, I think it's coming. It's coming thick and fast. He wants any opportunity to get rid of him. And if this is sufficient grounds for it, he will be speaking to his lawyers perhaps right now and trying to figure out if there is room for removal. Now, what does this mean? If Trump does manage to get rid of Powell ahead of schedule, okay? The key thing, and of course, by the way, this could also be Trump fires him, or it could be Jerome Powell steps down. Okay, so Jerome Powell could, of course, already be having backdoor conversations, at which point he decides, look, it's better for me to step down, not take this any further and leave quietly, ultimately. But what I want to stress here is what is the opportunity scope? Well, look, right now the markets are pricing in a lot more cuts. Not via the rates market. Okay, the rates market is still only pricing in around 5 cuts. So there's still a lot of room for the rates markets to price in more cuts. But the dollar definitely is pricing in a lot more than 5 cuts. We also know that the equities are pricing in quite a number of cuts. So right now the markets are of the view that whoever comes next is going to be far more dovish. Okay, and that's all you need to know. Far more dovish means this dollar index doesn't stop here. Okay, this dollar index is going to make its way down to 92 in short order. Okay. If Jerome Powell gets sacked, if Jerome Powell steps down today, dollar's going a lot lower. Euro is going to be the number one pick. Swiss franc, the risk-off type currencies are going to be the favored ones. Okay, Swiss franc, Japanese yen, euro. That's what you want to be buying, as well as Bitcoin. I think Bitcoin can probably be part of that just because of the structure that we spoke about yesterday. Okay, I think Bitcoin on a Powell stepping down should find its way back up to record highs. Okay, why? Well, because if Powell's stepping down, again, it calls into question the independence of the Fed. Do you want to own the dollar? Who wants to own the dollar when it's weak? And Bitcoin is ultimately an alternative to the dollar. Okay, so we should see Bitcoin at record highs. So those four are the real sort of opportunity scope where you can really get long against the dollar. You can also look to get long the rates markets. Okay, I think buying front month, perhaps 2-year bonds, that's somewhere where you can trade, as well as the rates markets. Okay, because what you can expect is whoever comes next is pretty much going to immediately be pushing for cuts. Okay, so that's the key takeaway from this. We get a step down from Powell, we get Trump clipping Powell, anything along those lines, short dollar, long bonds, and the bonds will outperform as well, not just because of the rate cuts being priced in, but also because of a little bit of risk off. Okay, what will equities do? Well, again, I think equities might initially go the wrong way. Equities might go bid on the idea of more rate cuts, but then ultimately the whole independence gets called into question. Okay, now it's not to say that equities won't go down. I think just equities could do one of two things. They could perhaps first go up, then go down, or go down. The point is, long bonds, short dollar is going to be a far easier play. Okay, now let's move on. Of course, we do have two key data points out today. It's ISM manufacturing from the United States, as well as JOLTS. They are two big numbers. The manufacturing matters not because I think it's going to do anything crazy. We can see, obviously, we've been in somewhat of a manufacturing recession or manufacturing contraction for some period of time. Okay, so whether the number misses, whether it beats, I think it's mostly irrelevant. But where it will matter, the ISM, is for oil. And we'll talk about oil in a minute, because there is a very strong correlation between manufacturing data and the oil market. Okay, now we know oil desperately wants to do something. And so I think if you get a beat in the manufacturing today, you'll see oil bid to the upside. You get a miss, I think we'll perhaps get a test of last week's low, a failure, and then a rally. But we'll talk about that structure in a moment. I think one of the more important data points will be the JOLTS data. Again, we can see that it is very much in a natural downtrend. We have tested that 7 million jobs just earlier or late last year, and ultimately we got close there earlier this year. I think anything under 7 million is going to perhaps jolt the market. It'll be a little bit of a surprise below 7 million because it does start to perhaps point to job openings starting to soften a little bit more than what the Fed wants to see. Okay, right now the term solid labor market is still the Fed's catchphrase. Below 7 million, perhaps they start to call into question how solid it is. Okay, it won't necessarily be recessionary or anything like that. It will just be another piece of the puzzle that's starting to point towards softness in the hard data. That's all you need to know about it. Neither of these two are going to shift the needle unless, of course, we get some really crazy outlier numbers. The key data point, of course, remains the non-farm payrolls from Friday. Now, the play of the day ultimately comes in the WTI. We can see that pretty much since the Iran-Israel truce, the market has gone into a very, very narrow range. Okay, now it's not to say that we can't stay in this range, but these sort of narrow ranges tend to want to expand upon themselves. And I think that's the play now. What do I mean by expand? Well, look, I think if we break to the upside, we're probably going to do something like that. If we break to the downside, we're probably going to do something like that. Oil's going nowhere until further notice. It is just going to start to fill out this range and start to just expand upon the $64 to $60 range. That's what we're looking for, some form of an extension, expansion, and retracement. Now, ultimately, we can see that there's a little bit of a ledge forming to the downside here in oil, so I do expect that gets taken out at some point. Like I said, a miss in the manufacturing data, that's the target. A little bit of a break of that, an extension of last week's lows before buying it back up to retrace. That's one of the plays should we get a miss in the manufacturing data. To the upside, same sort of thing. We get a beat. I do expect we are going to be testing in and above the 66.40. I think we'll probably go a little bit higher up towards 68. So that makes absolute sense. That's where we accepted quite a bit of volume last week. And then again, likewise, a little bit of retracement back towards the range. Okay, the point is, oil's in play, is looking for something to do. The manufacturing data today is going to give it that something to do. Okay, now with that in mind, of course, like I said, we got a little bit more hardline data today, so perhaps we get something interesting. But it is the 1st of July. It is effectively a 3.5-day week. It is effectively a week in which pretty much anyone and everyone wants to just get to Thursday, get beyond non-farms, and go on holiday. So don't forget that the implied ranges are a lot narrower, which means we stay in that mindset of not looking for too much. Take your trades, take your opportunities, take those scalps. Don't look for too much asymmetry because you ain't going to get it this week unless something dramatically changes. With that in mind, don't forget as well, we are very quickly approaching the 8th of July, at which point someone's going to get some letters from President Trump telling them exactly how much they need to be paying in terms of tariffs. So that headline news is probably going to hit us soon. So you do need to be aware of what the opportunity scope is there. Therefore, plan accordingly. With that in mind, any questions, do post them in the Discord channel. Otherwise, good luck out there. Manage that risk. Go make some money.